Welcome back to the deep dive. Our mission today is pretty laser focused. We are diving into a really detailed strategic and market analysis concerning SoFi. And if you're just looking at the daily chart, things look fine. The stock's up over 1%, trading around that $26 range. But look, we all know daily noise is just that. It's noise. Our sources suggest that behind this kind of calm surface, there is a massive, and I mean massive, catalyst brewing that could fundamentally shift things for the company.
Exactly. And for those of you listening, we're going to try and connect the dots for you. We're going to synthesize three really different streams of information. We'll start with the macro environment, the big picture stuff that's holding things back. Then we'll get to the main event, this game-changing acquisition rumor. And finally, we'll look at the charts because the technicals are showing some highly unusual activity that seem to back all of this up.
Okay, let's unpack that. Let's start with the current market mode. The volume today is pretty low, right? Sitting around 11 million shares. If there's this big catalyst brewing, why isn't big money, institutional money, pouring in right now?
Well, the short answer is digestion. Institutions are hitting pause. They're trying to figure out two new, pretty big pieces of global macro data that just came out. And both of them, they add a layer of caution, especially for a company like SoFi.
Okay, so what's the first one?
The first data point is about the housing market. Existing home sales actually came in higher than expected.
Higher. Now, normally you'd think that's good news, right? A strong economy.
You would, and on the surface, it is. But for the Federal Reserve, it complicates things. It really muddies the waters when it comes to potential rate cuts.
Okay, so explain that complication. Why would strong home sales be a headwind for rate cuts?
It's all about something called the wealth effect. See, when home sales are high, prices stay up. People see the value of their biggest asset holding steady or even rising. That makes them feel more confident, more willing to spend. And if the Fed sees that strong consumer spending, they have far less incentive to cut interest rates to stimulate the economy.
So the market wants a clear signal for rate cuts, and this data just makes it fuzzier.
Precisely. It keeps some of that big capital on the sidelines, waiting for a clearer picture.
Okay, that's the domestic side. What about the global factor? You mentioned a pinch on global liquidity.
Right. That's the news out of Japan. It might seem far away, but Japan just raised its interest rates for the first time in ages.
Ending that whole era of negative rates.
Exactly. And that matters because of something called the carry trade. For decades, huge investors have borrowed money in Japan for almost nothing. I mean, near 0% interest. Then they take that cheap money and invest it all over the world in higher-yielding assets. U.S. stocks, tech stocks, you name it.
Okay, so now that the borrowing isn't cheap anymore.
The whole trade unwinds. That capital gets pulled back to Japan. It tightens the screws on global liquidity. There's just less cash sloshing around to buy up growth stocks like SoFi.
Okay, so when you put those two things together, the Fed uncertainty here at home and this liquidity pinch from Japan, it makes perfect sense why the volume is low. But that's all external stuff, which, like you said, makes the company-specific catalyst we're about to talk about even more powerful. So let's get to it. This is the rumor that could completely change the story. And the source is important, right? It's from a SoFi insider on Twitter who's apparently been right before.
That's right. And the rumor's pretty simple. SoFi is in the process of acquiring the assets of the bankrupt crypto lender, BlockFi.
BlockFi. Okay.
But it's the number that's just staggering. The rumored price for the whole thing is just $18 million.
18
Yeah.
million. We have to put that in context because that discount is the entire story here. Just 2 years ago, back in 2022, FTX was looking to buy BlockFi. And the price they were talking about then?
$240 million.
$240 million. So if this rumor is true, SoFi is getting this for a 95% discount.
It's an unbelievable discount. You're talking about buying a massive piece of crypto infrastructure for, truly pennies on the dollar. That 2022 valuation feels like it's from another universe.
It really does.
And that volatility is exactly why this is so smart for SoFi.
Yeah.
They're doing what great companies do. They're buying valuable assets when everyone else is scared and things are cheap.
But wait, doesn't that feel, a little too good to be true? What kind of baggage comes with the BlockFi name? Are they buying the debt? The problems?
That's the critical question. And the beauty of a Chapter 11 proceeding is that they're likely not buying the company. They're buying the assets out of the bankruptcy.
So they get the good stuff and leave the bad stuff behind.
Exactly. They get the technology, the platform, maybe the user list, the regulatory groundwork that BlockFi laid. But they leave the toxic debt and the liabilities with the old corporate shell.
Which fits perfectly into their strategy, building that competitive moat you hear them talk about.
It's a perfect fit. They want to expand their crypto offerings. This deal, if it's real, could accelerate their roadmap by years. They get the tech and the customers without having to build it all from scratch.
So it's a strategic shortcut, bought at a fire sale price, with most of the risks stripped out by the bankruptcy court. Okay, that explains the excitement. But a rumor is just a rumor. When might this become real? Is there a specific date we need to circle on the calendar?
Yes. And the timing is all tied up in that Chapter 11 legal process.
Right.
There's a major hearing that was rescheduled, and everyone watching this is now focused on one day,
January 8th.
January 8th.
That's the date. Our source material points to that hearing as the moment we could get an official announcement, a final sale directly to Sofi.
So January 8th is D-Day. That's when we find out if this is real or just, market chatter. It's a clear, hard catalyst date.
It is. The market now has a timeline. Okay. So we've got the murky macro picture and this huge game-changing fundamental story with a deadline. Let's talk about the third piece of the puzzle, the charts. Are the technicals backing this up? What are they telling us right now?
The technicals are, well, they're screaming that something is up. The word our sources used was sketchy.
Sketchy? How so?
First, let's talk about the shorts, the people betting against the stock. If you look at the cost to borrow shares to short SoFi, it's gone negative.
Wait, negative? How does that even work? Usually you have to pay to borrow shares.
I know, it sounds crazy. It means that the brokers, the big institutions, are literally paying short sellers a small fee to borrow the shares from them.
Why on earth would they do that?
It signals a massive oversupply of shares available to be shorted. The big holders have so many shares just sitting there they're willing to pay someone to take them. And what that tells you is that the short side of the trade is already incredibly crowded. The risk of a short squeeze goes way up.
And the downside is limited because if you're getting paid to hold the short, you're not in a hurry to sell more and push the price down.
You've got it. It puts a sort of floor under the stock while building up all this coiled spring potential.
The coiled spring. I like that. So what's the second indicator?
The second one is a classic momentum indicator. It's called the stochastic RSI.
Okay.
And right now for SoFi, it is flashing oversold, deeply oversold.
And for anyone who doesn't live and breathe charts, what does that mean?
Think of it like a rubber band. The price has been stretched downward too far and too fast relative to where it's been trading recently. The selling pressure seems exhausted. When you see that indicator hit oversold levels, it often signals that a bounce or even a full reversal is imminent. The rubber band is ready to snap back.
So let's put it all together. You have this bizarre negative cost to borrow, suggesting the shorts are overcrowded. And you have the stochastic RSI screaming that sellers are exhausted.
It's a powerful combination. It strongly suggests the downside is limited, the pressure is just building and building for a move up, and if that January 8th catalyst hits...
The spring uncoils. The rubber band snaps back.
That's the idea. It's a textbook setup where the technicals are aligning perfectly with a huge potential fundamental catalyst.
All right, that brings us to the end of this deep dive. Let's just do a quick recap for everyone. We've got the external noise, the Fed, Japan keeping a lid on things for now. But underneath that, we have this massive potential catalyst.
A 90% discount on a strategically vital acquisition of BlockFi's assets. A deal that could supercharge their crypto division.
It's a hard catalyst date of January 8th to watch.
And all of this is being confirmed by the charts. The negative cost to borrow and the oversold RSI are both signaling that the stock is primed for a serious bounce.
So here's the final thought, the big question for you to mull over. If an asset that a major player like FTX thought was worth hundreds of millions of dollars just 2 years ago can now be bought for just $18 million out of a bankruptcy, what does that tell you about the real risk and opportunity of integrating crypto into traditional finance right now?
It tells you that the distress is creating a once-in-a-cycle opportunity. The big players, the smart ones, can now pick up the core infrastructure of the last crypto boom for almost nothing. They're positioning themselves for the next cycle. It's a powerful setup, and it can make for a very, very exciting start to the year for SoFi.
Absolutely. So keep an eye on that January 8th date. This could be one of those internal company stories that completely overpowers the macro noise.